Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 16th, 2025, and we're diving into Alcoa's first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Alcoa has delivered a strong performance this quarter, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. Alcoa reported a revenue of $3.4 billion for Q1 2025, which is a slight decrease from the previous quarter. However, the company has shown impressive improvements in profitability. John, can you shed some light on this?
Absolutely. While the revenue saw a slight dip, net income surged by 171% to $548 million, and adjusted EBITDA increased by 26% to $855 million. This was primarily driven by higher aluminum prices and effective cost management. Alcoa also ended the quarter with a strong cash balance of $1.2 billion, which positions them well for future investments.
EPS performance and analyst expectations. Alcoa's adjusted earnings per share came in at $2.15, significantly beating the analyst forecast of $1.73. John, what factors contributed to this outperformance?
The EPS beat was largely due to the favorable market conditions for aluminum, which led to higher prices. Additionally, Alcoa's strategic initiatives, such as the joint venture for the San Ciprián operations and debt repositioning, have contributed to their improved financial performance. The company's focus on operational excellence amidst economic uncertainty has also played a crucial role.
Strategic initiatives and market conditions. Alcoa has been active in strategic initiatives this quarter. Can you tell us more about their joint venture and debt repositioning efforts?
Certainly. Alcoa formed a joint venture with Ignis Equity Holdings to support the San Ciprián operations, which is a strategic move to ensure continued production and future growth. They also repositioned their debt with a $1 billion issuance in Australia, which helps optimize their capital structure. Despite facing $20 million in tariff costs, the company managed to navigate these challenges effectively, aided by the increase in aluminum prices.
Operational efficiencies and future outlook. Looking at operations, how did Alcoa perform in terms of production, and what can we expect moving forward?
Alumina production was slightly down at 2.35 million metric tons, and aluminum production was 564,000 metric tons. Despite these minor decreases, Alcoa expects stable production levels for the rest of 2025. They also anticipate an operational tax benefit of $50 million to $60 million in the next quarter, which should support their financial performance.
Key takeaways. In summary, Alcoa has delivered a robust performance in Q1 2025 with significant improvements in profitability and strategic initiatives that position them well for the future. John, any final thoughts on Alcoa's investment prospects?
Alcoa's strong financial results and strategic moves make it an attractive investment, especially with the positive market conditions for aluminum. Investors should keep an eye on their continued operational efficiencies and market developments.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Alcoa's performance in the comments below. Until next time.